Well, the grain trade had a little bit of information that was out this morning at 11 o'clock Eastern, 10 Central Time, and that was the grain export inspections. Let's take a look at these numbers in a little bit more closely and let you know where this comes in at. Corn came in at 632,793 metric ton. Now, last week, that number was only 349, so a vast improvement here. Sorghum, however, on the other hand, was a little bit disappointing. 65,725 this week. That compares to 142,046 last week. Soybeans came in just slightly under last week at 213 million. Last week was 219 million metric ton. And the wheat came in relatively close, 259,264 last week. We were at 308,414. So as far as news goes, the only really big news in that whole report really was the sorghum. But of course, that's not traded on futures. Let's look at the corn futures, though, right now and see where we stand. That nearby contract was really trying to hold on to a gain, still is at this hour. December corn up a quarter, 343 1/4. July corn down a half at 370 3/4. On to the soybean market. It's January down 2.5 at 988. March beans down 2.5 at 999. And that is underneath the high of 1002 3/4, but still above the low of 994. So just about right in the middle of that range. Now let's bring in Scott Gecas. He is at the edge of the trading floor at the CME Group in Chicago. And Scott, welcome to the program. We're starting to see this really thin volume of trade start to take shape now.
Yeah, I mean, going into the holiday, it's going to be, I mean, everything is expected to be a little bit lighter on the volume side. The one thing that does stand out to me coming in this morning was just the rumor that the Chinese is, in expressing a little bit more interest in the soybeans as well as the corn market. So you're seeing, the markets react to that. It's very rare that you hear any rumors that are moving commodity markets like that. But as you can see, especially with the corn market, moving a little bit higher.
Well, you bring up a good point, and these rumors kind of floating about. Number one, we've got a dollar that has kind of leveled out here. And number two, we've got some prices that would make it pretty attractive to end users, wouldn't it?
Yeah, for sure. And we're definitely going to keep watching that dollar, just because of the fact of, the import-export, it's going to affect those prices as well.
Right now, the dollar up 340 at 93.910. That's on the nearby contract. You go out to the March contract, we're up 380 at 93.630. So a lot of this dollar also is going to depend on the dollar chart. And when we look at that dollar chart then here, Scott, it looks like we could be in for just kind of a range-bound trade here for a little bit, unless we would get some kind of economic news to bump us out of that range.
Yeah, and that's expected, especially with all this tax reform stuff going on. We would expect the dollar to be sideways unless something, positive comes out or negative.
Okay.
Everyone's just in a wait-and-see mode.
Scott Gecas here with us, and when we return, Scott, we're going to talk about the livestock trade. That's straight ahead here on the Market Day Report. With long leaf trading, it's Scott Gecas here with us. He is at the edge of the trading floor at the CME Group in Chicago. Scott, the cattle on feed report is now behind us for another turn here around the corner now until we get to December anyway. But this time it seems like the trade was basically kind of prepared for some of what was in this, and it wasn't quite as extreme.
Yeah, the feed report, for November 1st, it came in a little bit higher than expected, around a little bit above 106. They expected around 105.5 or so. So it was a little bit bearish. Everything's still going to be focusing on, the weather aspect. It's still showing, warmer than normal temperatures, a lot less precipitation. So, traders for the cattle market are net long. We could see some liquidation below the 118 level. As you can see, coming in this morning, it did broke. When I walked in, it was around 117.5 or so. So it did spike a little bit lower. I would continue to see, I would see about some liquidation coming in here below that 118 level.
So when we look at the live cattle chart, where do you see real good support then?
based on, the 118 level for what we were looking at, and as far as the rest of the year goes, that's a very significant level. So I would not want to be, long below 118.
Okay, that 118, and when we check our what's going on with the futures right now for these live cattle futures, they are a little bit weaker here today. December down 147, 117.38. February down 160, 123.08. We're going over to the feeder cattle market. This cattle market here is weaker also. January feeders down 107 at 150.65. March feeder cattle down 130 at 148.82. So Scott, basically all this is going to come down to is how comfortable the consumer feels going into the new year and how willing they are to go over to the meat case and pick up some steaks here after Thanksgiving.
Yeah, exactly. So we'll see what happens. I mean, like I said, the 118 levels is just a very big number for us.
Okay.
I'd be long above it, short below it.
Okay. Hog market then. Let's look at the live or the lean hog market here. I want to get your thoughts on this. December lean hogs are up $1.67 at 62.32. February up $1.74 at 68.82. So when we look at the chart for the lean hogs, Scott, if you go back, even a month and a half now, almost 2 months. I don't know where November went, but you go back here, we probed above that $65 mark, closed in on that $66 mark, real close. Now we've got some resistance here above this $62 mark that we're going to have to go up and test if we want to take this market to the next level higher, aren't we?
Oh, yeah, for sure. For the hog market, the $60 range is pretty much the line in the sand. We've seen a big pop on Friday. They could not hold at 62 level. Coming in, as I walked up, it was trading a little bit over 62. It was around 62.20 or so. So that is a little bit, positive flow inside. But, the market's still trading at a very large discount, versus the 5-year average of only 35 cents. I think right now we're around $5.45.
All right. How do we find out more about longleaf trading?
Longleaftrading.com, or you can always give us a call at 312-483-2183.
Scott Gecas here with us with Longleaf Trading from the edge of the trading floor. Thank you very much, Scott. We appreciate it.
Yeah, you too. Thanks for having me. Have a great holiday.
You bet. Same to you. And last check, and just a little bit ago, the Dow was trading anywhere from about 95 to 100 points higher, Janet.
All right.
So still kind of holding about steady where we were first thing this morning.
All right. Thank you very much, John. Appreciate it.